We're going to start today's video with a little fun. Tell me if you think this is a sign that we've reached a market bubble.
About to buy $1 million home for half the price.
I'm already sold. A young kid about to teach us how to get a 50% discount on luxury real estate is exactly why I go to TikTok.
The thing is, you can only do this if you know how to utilize cryptocurrency.
I've heard about buying cryptocurrency making you rich, but now that I could possibly get a 50% discount on luxury real estate, I kind of low-key hope this kid has a course.
So this is the house that I'm going to buy, and it costs about $1.4 million. So I'll have to pay around $7 grand a month. But for this entire house, the total that I need to pay is $740K. And it's because of crypto. For the down payment, I'll have to pay about 20%, which is $290K. With the remaining $450K, I'm going to put that into the Anchor protocol. Once I deposit the $450K, it'll yield me 19% per year. That's 88 grand a year. Now divide that by 12 months, and that's going to make me 7.3K a month, just enough to cover the monthly cost of this mansion. After it's paid off, I'll have a $1.4 million home, plus be making 7.3K a month doing nothing. If you want to learn more about crypto, check out my bio.
I know you all are sitting there thinking this kid just found a cheat code to buying a luxury house, but don't worry, I'm here to break down why this will be the funniest TikTok of 2022.
This is the house that I'm going to buy, and it costs about $1.4 million, so I'll have to pay around $7 grand a month.
The address could be seen in his video, so I confirmed it on Zillow. The house was sold for $1.4 million on April 4, 2022. Using my favorite app, Batch Leads, I can look at the buyer's info to see if it was Matt. Surprise, surprise, it wasn't him. I'm blocking the buyer's names for privacy reasons. So we know he didn't buy the house. Let's continue.
But for this entire house, the total that I need to pay is $740K, and it's because of crypto.
Matt never explained why he was only paying half the cost of the house. See if you catch it on second viewing, but he just said he's only paying $740,000 for it with no explanation of how.
The down payment, I'll have to pay about 20%, which is $290K. With the remaining $450K, I'm going to put that into the Anchor protocol.
I'm seriously confused. I don't think he understands how to buy a house. You can't just tell the lender, hey man, don't worry about the other 50% necessary to buy the house.
It's because of crypto.
Yeah, lender, just because of crypto. You just don't get it, Mr. Lender. You're not a crypto bro.
Once I deposit the $450K, it'll yield me 19% per year. That's 88 grand a year.
I apologize to you all for not recommending this investment earlier. 20% return on a crypto and you can get a mansion for 50% off? I wonder what this Anchor protocol is that he's talking about. I'm having fun using these TikToks to analyze where we're at in the market, and one way I'm able to keep up with business, finance, and tech is by reading Morning Brew every morning. What I found to be most helpful by reading Morning Brew every morning is that it's just a little reminder that focusing on investing, the economy, and the world around me is a little more important than anything happening on social media like my Explore feed. And the best part is that it's free. Wait, it's free? It sure is, and I'm able to complete my reading in under 5 to 10 minutes. It's been enjoyable reading the newsletter as part of my morning routine now, and if I happen to miss my morning reading, I can actually get it done at the gym in between sets. This is the cheat code for hyper-efficient learning. Admittedly, I used to spend a little too much time scrolling through my Explore feed in the morning, but now I'm able to get up to date on everything news-related in under 5 minutes. It's absolutely a much better use of my time and energy right after waking up in the morning. Morning Brew delivers every day, Monday to Sunday, and the best part is that the newsletter is delivered with a little personality. Thanks to Morning Brew for sponsoring this video. It's free to sign up by clicking the link in the description. Back to the video. We'll get to Anchor Protocol in a minute, but we have to do some trivia first. If you followed this young Warren Buffett's advice a couple months back, how much of your money would you have today? A, your investment plus 20% returns. B, just your original investment, or C, 99% losses.
Now divide that by 12 months, and that's going to make me 7.3K a month, just enough to cover the monthly cost of this mansion. After it's paid off, I'll have a $1.4 million home, plus be making 7.3K a month doing nothing.
He never answered how 50% of the price of the house just disappeared. You just buy crypto, bro. 20% APY, bro. My best guess is he has $700,000 in cash, and investing the difference between the down payment and his bankroll would net him enough each month to pay his mortgage, maybe? We can put his little theory to the test. Other people had heard about this investing gold mine of 20% returns and went to Reddit. I started looking into it last week and see the Anchor protocol is 20% APY for staking stablecoins. When I first saw that, I thought to myself, no freaking way. Then I went to their site and saw that it was legit. My only question is, what's the catch? This poor guy just doesn't understand crypto. There is no catch. You just put your money in the slot machine and take your 20% every year. The high APY is to entice people onto the platform. That 20% isn't going to last forever. Isn't going to last forever? I thought this young savvy investor on TikTok was going to have 20% returns for the next 30 years to pay down his mortgage. The catch is that 20% won't last long. They're using that rate to lure customers, and they, along with Luna, have been all the better for it. The protocol itself is legit, and so is Luna. There was an issue with Anchor Reserve running low, but they've refilled the reserve. I think I watched a video on Luna recently. I can't remember what happened. Let me Google it to see if I remember what it was. At their height, Luna and UST had a combined market value of almost $60 billion. Now, they're essentially worthless. Worthless seems a little harsh, doesn't it? I'm sure this coin had some value, right? You could get 20% returns on it just 2 weeks ago. Well, this is really interesting. It dropped 100% overnight. You would think something so valuable that could earn everyone 20% returns for 30 years would hold its value longer than 3 weeks. Even as the fund was selling, Pantera Capital CEO Dan Morehead joined CNBC in December 2021 to talk about his top altcoin picks, which included the Terra blockchain's Luna token. This is my favorite quote from the article. It's almost too funny for me to believe. "We think it's one of the most promising coins for the coming year," Morehead said of Luna. "So many people are just discovering it and just starting to trade it." This guy literally sold 87% of his position in Luna after going on TV and saying, "Guys, this is an amazing and promising coin, one of the best this year. If you want some, I just happen to have my entire portfolio for sale." What a coincidence.
Know how you'll become a billionaire. Okay, here's my plan. In about a week, I'm releasing 10,000 NFTs. Each NFT costs around $400. Multiply that by 10,000 NFTs and we'll profit about $4 million.
The NFT art space can only exist when there's too much money chasing after too few goods, aka inflation. When people think they can make $4 million by selling something worthless, it's probably a good sign that the market is in need of a correction. The last Twitter post appears to be January 31st for his Blockheads project. It also looked like no one bought his NFTs, as the floor price reading triple dash means you can get them for free at your local Goodwill. This video is definitely not meant to pick on this young kid trying his best. I just find it to be a good indication of where we're at in the economy.
But that's a good one. What I might do as well, many have asked, is to do a retire on Luna, what it would take, especially when staking with this type of income. But the question is, will that 8% continue? The answer is, could do. So let's look at my price predictions now.
This guy seems pretty intelligent and rational, but just a couple months ago he made a video reviewing Luna. He made up numbers to justify saying Luna is going to massively increase in market cap and price over the next few years. Only 4 months later, it became one of the biggest and most damaging scams in the last year. Remember everyone, price and value are two different things. When these coins have zero value, the price can go up for a while, but it will always head to zero at some point, and you don't want to be holding it when it does. It's easy to find videos like these of some guy saying you can 300x your money in 2 minutes with some crypto project. He's talking about a crypto project called Refinable. Here's the chart. What an excellent investment. We're now going to look at another crypto bro telling us how to get wealthy from a $1,000 investment.
Let's say I'm projecting Hex to be triple its value in about another year, right? About 96 cents, maybe midway through 2022.
We're midway through 2022, and this little darling of a gold mine investment isn't close to 96 cents. Hex is now trading at 7 cents, a far cry from 96 cents as projected a few months ago by this expert.
So what Hex is really a store of value, just like Bitcoin.
All of these crypto bros claim their new revolutionary project is a store of value. Having your investment lose 85% in a few months is literally the exact opposite of a store of value. I live in Vegas, so I'm within 20 minutes of about 100 different casinos. If anyone was playing slots and told you that the machine they're playing on was a store of value, you'd look at them like they were a lunatic. On nonfungible.com, you can create a chart to show data in the NFT marketplace. I began looking into the NFT market to analyze the trends because I think this will be one of the first indicators of the overall market turning. The orange line represents the number of sales and the white line represents the number of active wallets. When the market was scorching in August, everyone was making TikToks and YouTube videos about how easy it was to make money in NFT land. In my opinion, I think 90% of NFTs are worthless and only being purchased by people in an inflated economy. We can clearly see that there's been a significant downward slope in the last 9 to 10 months in the number of sales and active wallets. The reason why I included active wallets in this chart is because I think that's a better representation of the market as a whole. How many people are actually participating in the NFT marketplace? Since I believe most NFTs are inherently worthless, if the only people who believe they aren't worthless are no longer buying and selling, then the logical conclusion is the market will crash. This chart includes the number of primary sales in orange and the number of unique buyers in white. What's interesting to me is seeing how few unique buyers there are compared to the peak. That downward trend seems significant to me. There's been so many notable scams, rug pulls, and influencer shilling crap projects that could certainly play a factor in the market taking a dip, but I think this is an indication that we're about to see the overall economy begin to take a turn where the fun money is no longer buying JPEGs of bunnies with earrings and headphones. The good times of easy credit seem to be coming to a close as subprime borrowers are increasingly falling behind on payments. That scary trend is happening on debts ranging from credit cards to vehicle loans. Car loan defaults hit 8.8% in February, a 15-year high according to Equifax. I'm not a believer that we're headed for a market crash. Every bubble is going to pop, everyone is going to be homeless, and the markets are going to drop 50%. So please do not take this video as one of those types. My buddy Lucky and I bought this 2019 Aston Martin DB11 that is an absolute beauty. It's a repo, so we bought it at a crazy discount and it only really needs new brakes. The owner was a successful business owner and owner of multiple exotic cars, but a slight turn in the economy led to him having to offload this beauty at a massive discount. That's obviously just a single example and doesn't lead to any conclusive evidence, but there are signs that the market, real estate, cars, business funding, etc. is certainly going to correct very soon. Here's a chart from Layoffs.fyi that seems to indicate an upward trend in layoffs for tech companies. It's not just early stage startups that are feeling the burn. Big tech companies including Meta, Salesforce, and Netflix have also recently announced hiring freezes or layoffs in the midst of cost-cutting pressure and rising inflation, coupled with a looming bear market and rising interest rates. Thanks to newsletters like Morning Brew, I've been paying more attention to the economy at large and have noticed more mentions of hiring layoffs and freezes. It doesn't mean the world is coming to an end, but it's starting to feel like the early stages of a massive correction and likely recession. Global venture funding totaled $47 billion in April 2022, the lowest amount invested in private companies in the past 12 months, based on an analysis of Crunchbase data. While the dip isn't massive, it does signal that the slowdown we saw in the first quarter of this year is the start of a longer-term shift in funding, particularly at late stage. The Federal Reserve on Wednesday released the minutes from its latest meeting showing that the central bank plans to deliver more 50 basis point rate hikes this year, likely at each remaining meeting on the calendar. In an effort to tamp down inflation, the Fed may also raise interest rates more than the market currently anticipates. Unfortunately, the days of being able to invest a little money into a crypto project and make 20% per year so that you could buy a $1 million mansion might be coming to an end. But the good news is that regardless of what market we're in, what interest rates are doing, or how crazy the real estate market is, we all have the ability to make money if we invest wisely. Thanks for watching.